The 2008 financial crisis, dubbed as the Great Recession, was a global economic disaster that began with risky lending practices and the housing bubble. The stock market crashed. The unemployment rate went up, and what seemed to be the United States of America financial crisis turned out to be the global financial recession. You may be wondering and asking yourself a lot of questions. How can a country so great and powerful lead into a global recession? But don't trouble yourself, because however how perfect the system is, it can't lack the flaws and Trojans that can corrupt it. Sit back and relax, because things are getting more and more interesting. Banks issued mortgages to borrowers with poor credit and who did not guarantee to repay. As a result of this poor quality loans, the financial institutions dug their own grave.
When interest rates froze and the housing bubble burst, borrowers couldn't afford their payments. Losses incurred from issuing bad loans fueled the financial institutions' fail. The low-quality loans fueled the housing price bubble. The 2008 housing market crash was primarily caused by a housing bubble that resulted from easy credit and low mortgage rates. As the bubble burst, defaults on subprime mortgages caused financial institutions to fail, leading to a widespread credit crisis. Losses incurred from issuing bad loans fueled the financial institutions' fail. The world governments and major financial institutions purposed to bring solutions for the ongoing predicament. Meetings were held, seminars were attended with one aim: to merge their ideas. Ideas that were later fertilized and a remedy was born. The first solution brought up with the central banks like the United States of America Federal Reserve Bank was to lower interest rates to make borrowing cheaper, encouraging spending and investment. Central banks bought government and treasury bills to inject money into the economy and support financial institutions. The world governments proposed to spend money on infrastructure projects, providing financial aid to struggling families and bailing out major banks and companies. The proposal called for the federal government to buy $700 billion of illiquid mortgage-backed securities with the intent to increase the liquidity of the secondary mortgage markets and reduce potential losses encountered by financial institutions owning the securities. Only institutions which had significant impact to the economy were considered. In 2010, an array of hope was evident to the world general public. What seemed to be hell turned out to be a better place to live. The investors were optimistic about the future, the consumer sentiment improved, the unemployment rate went down. Thus the 2008 financial recession was termed to have cooled. Thank you for watching. Consider smashing the like and subscribe button if you haven't done so. Bye.